Welcome to today's session. Today we are going to look at Wockpharma. So it is a pharma company, and what we can see in the quarterly chart is that there was a significant movement here in price, which was somewhere the peak was around 2173, and currently the existing trading price is at around 400. So that's a significant fall from the high what it ever had. Now let's look into the structure of it. What we can understand is price is running from this quarterly area, which is somewhere here with a higher point of 206 and the lowest point is somewhere between 66.74, and the price is currently reacting from also a quarterly supply zone, which is at 855, and then the bottom is around 638. So what we can see is that there were price once upon a time it was a green candle in the quarter of June 21, and then we found a buyer and the price was coming down, and currently from past three quarters, excluding the current quarter, it will be two quarter, price is actually stepping down. It is coming gradually downwards. So what we can also see here is that while price went up, it created another demand zone here, which is this portion. We'll keep this marking to understand better how it is going to help us in the monthly and the weekly chart. Now coming to the monthly chart, this is the same area what we have marked. So this is the rally and we have four base and then we have rally. So this rally was able to close above this point, which is marked here. So if the price is able to close above this resistance zone, it indicates there is a strong buying happening here for at least 4 months, after which the price was able to go up. Now, in the current candles, if you see for the recent months, these are all stepping down slowly. They are not significant movement, but these all are base candle, and the existing month, the current month which is going on, it is also forming kind of a very narrow range of movement. So usually what happens is that when you have similar situation where the price is not progressing significantly, we could expect some good momentum either on the upside or the downside. Now let's understand this structure here. The price was stepping down. It was the quarterly area which got hit, and then price came down to this level. We'll see better in the daily time frame that what is the turning point here in the quarterly chart. Monthly chart, if you see this marked quarterly area, this does not look too great because it has a lot of candle and it's not a very significant move. So let's look into the weekly chart. So what we can see here is that this is one of the point on weekly from where price reacted. So up to this area, from this current weekly portion till the lowest portion, everything is nullified because this area which is marked here is now tested. This is already consumed. This entire range is now consumed. Price was able to break above this level after hitting this area, and this is the portion which we are interested in, where we could see there is a movement of price. More importantly, if any point in time in future price comes to this level which is marked here, this will be one of the best investment area where we can buy for a long-term objective, because this is the point where the actual move started for the entire weeks. So now, under having understanding of this approach, what we can also do is that we can go into the daily time frame and look for trade opportunity. Now if we are at a daily time frame, and if you see, this is the same peak area what we considered in weekly, where we see the weekly touch point is there, then followed by a bearish long exciting candle, and then price is gradually stepping down. So if you see, apart from this one or two candles here, we do not have significant price movement towards the downside, but these values are quite high because even the price is stepping down with the smaller candles, it is also reducing the range of the price. So if you can see that the initial push was high, then there was a continuation move over multiple days. Then there was a pullback, again continuation of move. Again there is a pullback, but this movement is not having very significant range now over the period. And what we can also see in the current candle, like if you see in this period, which is December 21st till 30th December, the range is quite narrow, and the same is happening again here. So after this narrow range, we had a upwards movement again that got capped because of the supply zone, which is not so great, but we still have them, so we cannot ignore those ranges. Now, if I need to put a trend line for us to understand, and if I need to market something like this to have a better coverage of all the weeks, what we can see is that this trend line is getting respected multiple times. And now after hitting this area, which is the third touch, price has come down to this bottom portion. Now let's zoom out a bit and then try to understand how this price is acting at this point of time. So this is the monthly marking what we made, where we saw the price went up and broke this entire resistance, and also this is the origin area which was contributing to the overall movement. Now, if I remove this line and put a horizontal line having the multiple touch point, let us understand how it is happening. What is the price action telling me about it? So if you see, this was one of the resistance area, sorry, support area, where price went up, again came down, somehow retested this area, again went down, and this is the same area which again halted the price. So it was quite a significant duration, after which there was a pullback to this area, and then it hit the quarterly zone. After hitting the quarterly zone, price is moving up. Now, as we also know that this time it has also hit a quarterly zone which is coinciding with a weekly, and price is coming down. So high chances are there that price will try to reach towards the high area of quarterly zone. So that's something what we can expect. But that is going to take time. So how do we find trade in this opportunity, in this setup? So let us understand this line. Let me bold it a bit so we can have a better view of it. So if you see, this is the line. Let's look into the current price action. Price was somewhere respecting this area. So this is one of the touch point where price moved from this bottom portion here. So this is kind of area which contributed to this upward move. Price again came back to this level, and it was able to push to the resistance area of this trend line because of this supply zone here. So it created a level, and now again this supply zone is getting respected. This is supply zone is getting respected, and this supply zone is also getting respected. As we know that if price touches a support level multiple time, it becomes weak. So considering that fact that there could be a possibility of weakness, and also Nifty Pharma is reaching to a supply zone, we could expect some downwards price movement here. So how can we plan this trade here? So what we can do here is that considering this is the movement which is pushing the price down, and if you see these weeks, they indicate that there is a selling pressure. So once this candle was trying to go up, and then it found buyer seller, and then it became a gravestone doji. You can also argue that this is a buying pressure here, because this candle was down, then it went up, and then it took the rally and took the support here. So the probability here is that we could see a level something like this. I will ignore this week because it is quite long in terms of the range here. So what we can understand is that price is currently consolidating. So from 1 2 3 4 5 5 days it is consolidating. So whenever you see a situation like this where the price is consolidating for more than 4 to 5 days, it has a trend to break upward, or trend to go down. Now considering that this orders area which is here, which is also was having a gap which got filled within the third day. But we can also see that price may not directly go upward to achieve the quarterly zone, and considering it is already coming from a quarterly zone, we could expect price to further go down. Now, from the traditional marking point of view, this is kind of a lower high and lower low formation. And what we can expect is that there will be a break below this level, and there will be a pullback. Again, the price will go down. So what we are targeting here is that we are targeting for a short move for intraday, at least for 2 3 days, where each day on cash we want to sell this stock as soon we find a good level or a pullback. So that way what happens is that we can plan our trade better. So if you do F&O, it could be a bit risky because the momentum in on the pharma sector is currently still high. So that you need to be a cognizant of. So you should have a proper risk management there. Now, my expectation here is that I have two trades which is planned for this area. One is that I want to have a intraday trade, which is here the bottom area. So my plan is that I am going to have a entry point below this level with a stop loss above this weak area, and I am going to play this trade till it reaches the bottom portion of the demand zone. So if you see, I have marked at a 1.65 because in cash you may not be able to hold it for more than 1 day without having brokers to pay penalty. So the plan is that I'm going to short all these candles whenever we see a pullback. So it will be short at each pullback at a lower time frame. So if I see a weak kind of a structure, then I will try to short that. So what I'm expecting is that we could have an opportunity to go short maybe tomorrow or within this week, and each day whenever the price is having a pullback at a lower time frame, we want to short that. We are going to do this activity of shorting, so I'm still bearish till we reach this level here. So if you see this area, let me mark it for you. So this is the area which we marked also on the higher time frame, that this is the one portion which was able to close above this level. And if I need to draw a trend line on daily also, which should be uh, something like this to have a multiple touch point, you can see this is the same area which had a break upwards and then pull back, and it had the significant price movement, and price have not returned to this portion which is currently marked here. So my expectation is that if we can do intraday short for each day, we should be able to do up to the price of 306. After it reaches 306, my viewpoint will be I'll be more of a buyer rather than seller in this script. So that way what happens is that we get a better risk to reward ratio, and we can plan our trade with at least 3 is to 1 kind of a risk reward. So let me show you what I'm planning here. So for this portion, my end stop loss will be below this area. So I'm combining this demand zone. Let me zoom a bit. Okay, so what I'm trying to do here is that I am trying to combine both the levels. So the reason for doing is that this section, let me zoom a bit for better understanding. So if you see this section, which was having a breakout, and then there was a consolidation over a very long period of time, and then price was able to break above and close above this resistance area. So what happens in such cases is that price usually trend to test this level to a deeper portion. So what we have here is that after this kind of a demand zone area, we have a better formation here. Why this formation is better, even why this formation is better, because we have less numbers of candles. The decision between the buyer and seller was swift here. They were able to decide and take a direction, but in this case it was not. There was a long period of consolidation, which does not indicate there's a significant decision making here. So what we are trying to do here is that, because we will be buying a stock which is falling from a very significant level, we need to combine these two levels here. So with the proper risk management, 69 rupees or 70 rupees risk is not a very big risk what you'll be taking. But if you have a proper sizing of your uh, trade, then you can easily achieve a good target. So what will be our target here? So if our entry and stop loss is here, so our target should be the untested supply zone. So at this point of time, what you can see, this is the only area which looks lucrative. This supply zone is already tested by this week. It came down. It was not having a good closing, but it again went up, tested again, and then coming down. So if you see traditionally also, it is making a head and shoulder kind of pattern. And as we know that the height of the head um, basically is the also the target area. So if you plot this range here, you will find somewhere in this portion where price could halt. And as we mentioned that this is the next best area, which is actually the origin of the move from one quarter demand zone to another quarter supply zone. So this is the trade what you can plan. So my view will be bearish till we reach this level here, which is marked for the demand entry, which is under around 305, which is kind of a psychological level also. And we can have a wider stop loss of 235. If price reverses from here, it is well and good. But what we can see from the price movement is that the movements are quite small. So if price breaks downwards, then the movement could be quite significant. And considering budget did not have any significant announcement in terms of pharma, those who were bullish may be shorting their position, closing their trade, which may also build up pressure for this down move. So this is the expectation in Wockpharma. Let me know your thought about this analysis, or in case you want us to review any other trade, do comment us with the script name. We'll try to take it up as part of the review. Thanks for listening. Have a good rest of the day. Bye bye.